Welcome back. It's time for business, and for that I'm joined by Matthew. Hello, Matthew. Now, we've been talking a lot about Spain over the last few days, but Italy too is causing some concern.
Yes, that's right, Claire. I mean, remember, Italy is the Eurozone's third largest economy, also saddled with a lot of debt. Plus, its economy shrank by about 0.8% in the first quarter. So plenty to be concerned about, and markets are reflecting that in the bond yields that are being charged on 10-year bonds. Those are up yesterday at 6.28%. That's a 4-month high. And to test that out, Italy will be in the bond markets today and tomorrow looking to raise about 11 billion euros.
But Italy's Prime Minister is insisting that the country does not need a bailout.
That's right. He's insisted no bailout now, nor in the future. He was partly responding there to the Austrian Finance Minister, Maria Fechter. She said in a TV interview that Italy may need a financial rescue because of its high borrowing costs. That didn't go down very well with Mario Monti or indeed with European officials.
And Mario Monti will be getting a prize today.
Yes, leaders get prizes too. Of course, he's a very respected economist. This is actually for leadership, this prize he's getting from the European School of Management and Technology. It'll be given to him by none other than Wolfgang Schäuble, who we can see there, the German finance minister. They'll have plenty to talk about. Indeed, yesterday, the finance minister of Germany was talking about this banking union that's been talked about. He was stressing again that countries can't form a banking union until they start making decisions on economic policy together.
If we want a transfer of sovereignty in a banking union, then please, we can talk about it. But only on condition that we first have a unified financial policy. If the decision process is not unified, then we cannot unify the accountability, because otherwise it's economically a mistake.
Well, while we're talking about Wolfgang Schäuble there, just a few comments he's made in an Italian newspaper interview this morning criticising France's new president, François Hollande, for returning the retirement age for some groups of workers to 60. He says that demographics in Europe and an ageing population mean that most countries are doing the opposite of that. So interesting. He's been quite forthright there.
Now, Spain is still a key concern for the markets.
Yes, of course, Spain is still a concern. Bond yields there were also up yesterday, in fact, to a Euro-era high of 6.8%. Of course, the higher they are, the more nervous investors are. That's worrying for Spain. In fact, Mariano Rajoy is in the Spanish Parliament right now talking about this problem. We also had Fitch yesterday, the ratings agency, saying that Spain is going to miss its budget targets both for this year and next year. Well, Fitch also downgraded 18 Spanish banks yesterday. That's worrying not only markets, but also some ordinary savers, and some of them have decided to move their money elsewhere.
The number one topic of conversation for many people in Spain is the EU bank rescue. How come they're bailing out banks when people themselves have to tighten their belt?
Saving the banks doesn't make sense. They got us into this situation.
Well, some are talking, others have decided that actions speak louder than words. Miguel here has withdrawn his money.
I didn't have millions, but even if it is only a small amount of money, it's mine. I worked hard to get it and decided to take it out.
Press reports in Spain say 1 billion euros has been withdrawn in under 10 days, with sums leaving Bankia especially. The banks are denying that. Investors are switching to foreign banks. 97 billion euros has gone abroad this quarter. That's a record. These savers are trying to get a hold of their money and are hoping this association will help them. 1 million Spaniards are believed to be sitting on toxic bank assets without realizing.
30% of my money is in shares, but we don't know their value, and I can't get access to the rest of the money for 10 years. It's totally crooked.
People are worried and angry. The cost of saving Bankia, for example, is equivalent to double the cuts to the health and education budgets.
Now, Matthew, despite fears, some concern over Italy and Spain, the market seemed in a bit of a better mood yesterday.
They are in a better mood. What's driving that is really some optimism that perhaps central bankers are going to do something to stimulate the economy. And we can see that reflected in the European markets, which are just opening right now, and they're all up in positive territory. And it was a similar story over in Asia, where markets have closed now. Quick bit of news there as well. The Nikkei in Japan, that was boosted by news that machinery orders in Japan rose by 5.7%. 2% in April, much higher than the 1.5% rise that had been expected. Well, now let's get some more of the day's company news. And the parent group of British Airways and Iberia is putting its expansion plans on hold. IAG said the appeal of mergers has faded due to the economic downturn. BA Chief Executive Willie Walsh said the group's enthusiasm to buy Portugal's TAP airline had significantly waned.
Swedish car maker Saab has found a buyer. The troubled company filed for bankruptcy earlier this year. That was after former owner Swedish Automobile failed to get the necessary backing. Administrators say they will announce the identity of the new buyer at a news conference later this Wednesday.
And the boss of the American investment bank JP Morgan will reportedly apologise to the US Senate today. Jamie Dimon will be answering questions about the bank's multi-billion-dollar trading losses last month. Dimon's expected to say he's sorry about the losses. He'll claim the problem was due to traders being poorly managed.
Now, under the terms of its bailout, Greece has agreed to privatise a large chunk of state-owned assets. Political turmoil there has brought the programme to a halt. As Greeks go to the polls on Sunday, there are hopes more certainty will get the programme back on track.
Privatisations in progress. Or are they really? Greece promised to sell billions of euros worth of state assets when it received a lifeline from its peers in 2010. The government set up a fund last summer to oversee its fire sale, hoping the programme will not only raise money but contribute to economic growth.
The impact of privatization is 5% more growth in GDP and about 200,000, 50,000 new jobs.
Banks, energy firms, airports, and even the police headquarters in the capital. Dozens of state-owned businesses, properties and infrastructure assets are up for sale. Many Greeks agree attracting foreign investment is crucial for the country's survival.
I think that if there is some investment, there will be more jobs. Because Greeks will be here to help in this job. It will be good for everyone.
But it's still a Leviathan task, and the ongoing political crisis isn't helping. With investors holding back their decision amid prolonged electoral uncertainty, the massive privatisation programme has been stagnant. Greece's ambitious plan to raise 50 billion euros by 2015 through state asset sales has always been in doubt, and political stability is desperately needed for it to pick up speed.
And one of Britain's best paid bosses faces a vote on his pay package today.
Yes, that's right, Claire. This is Sir Martin Sorrell. He's the head of the advertising group WPP. He's in line for a 60% pay rise, but shareholders are voting today and they might try to block it, although they won't have a casting vote. But it's just the latest boss who's seen some of this sort of shareholder uprising against executive pay. And an advisory body for shareholders called Manifest has published research showing who are the best paid bosses. There we can see Bob Diamond at the top there. They say that pay in the FTSE 100 on average is up 11% for these bosses, while their employees are up about 1%. Some of them even getting more than that, 40%. This is all, by the way, just to bring it over to France on the day when the French cabinet is going to be discussing limiting the pay for companies where there's a majority ownership stake by the French government. So.
And government members themselves have taken a pay cut, haven't they? And the president. Well. So there you go. All right, thank you very much, Matthew. That's it for business, and that's it from me for now. Stay tuned to France 24. Stuart Norval will have the latest headlines in a couple of minutes' time.